Good morning. Welcome back to the Broadcast Retirement Network. I'm Jeff Snyder. This is BRN AM for Wednesday, October 19th, 2022. And our top story today, Show Me the Income, plan sponsor and participant preferences for generating retirement income. Today's show is powered by Invesco. To learn more about the research that we're discussing this morning and a lot more, visit Invesco.com/DC. Joining me now to discuss this and a lot more, Greg Jenkins is the head of institutional defined contribution with Invesco. Greg, it's so great to see you again. Thanks so much for stopping by the program this morning.
Well, thanks for having me, Jeff. It's great to be on.
And here we are almost a year later. I know Invesco regularly is doing research. This time you've got some hot new research off the presses, and we're really pleased that you came to join us. Greg, I have to ask you, maybe start off with Americans' view of retirement. And we're talking about this survey that Invesco has done, completed, and we'll get into the nitty gritty here. But we just came through a global pandemic. We've got market volatility. We've got inflation. Has this changed Americans' perception or thoughts around retirement?
Well, that's a great question, Jeff. So, excuse me. So we've been doing research since 2007 around financial language and around investor behavior. And in this particular survey, this particular study, we looked at 1,000 participants of large plans, and we also conducted 12 focus groups. And I'll say that the focus groups here were more critical than ever before because the surveys just really didn't capture the mindset of employees. And I think some of that is, what we've been through. And we always do see some effects of the markets. We saw it in our research after the global financial crisis, and yet some things stay the same. But one thing that we saw that changed was, I think, is just the pandemic got people thinking more about retirement, more about the end game, more about their life at home. With their families and what comes next and where do I go from here. So I think we noticed a shift in mindset a little bit.
Well, Greg, following up on that, I want to ask you about the view of retirement by employers and employees. And oftentimes, look, I think employers and employees oftentimes agree with certain things, maybe not returning to the office, but that's a whole different show and segment. But true, right? But they also may think a little bit differently when it comes to some issues. How do they both look at retirement?
Yes, I think employers are more in tune with employees' attitudes about these issues than they have been before. And I think part of that is because of data. There's much better data available now for employers to look at. And I think there's been some great things that the industry has learned and has come to grips with about participants and the challenges they face. I do think that thinking about participants in retirement is a little bit of a mind shift. And I think in a moment, we'll probably talk about, some of the things we saw there, but there has been a shift. And so there's more for employers to think about. But one of the disconnects, if you will, that we saw was when it comes to turning a DC plan balance into retirement income, 80% of employers said that they had communicated with employees on how to go about this. But yet, on the participant side, only 38% of participants say that they remember receiving information like this. So, and I think part of that is just the challenge of education. I think it takes a long time for messages to get through. One of my clients likes to say that it's a marathon, not a sprint. Communications have to be layered over time for them to really sink in.
Yeah, I completely agree. And just to kind of follow up on that before we get into the survey results, we've been talking, you and I and Invesco and the network have been talking a lot about over the years about the shift to personalization. I know you cover a lot of this in your language survey. Mm-hmm. That one-size-fits-all approach that used to be applied, there's now a paradigm shift away from that. How have employers responded to, hey, it's no longer a one-size-fits-all approach?
I would agree with that, and I think there has been an evolution there. I think that, gone are the days where we think that a target date fund is a solution for everything. I mean, target dates are still great. They've amazingly, transformed the industry and done so much for participants, but they're not the answer to every challenge. And I think I think the mindset's become more healthy here. I think it used to be almost heresy to, suggest that we can do better than just target dates alone. And I think now there's a lot more creative thinking going on, ideas like defaulting older participants into a managed account program, and with an opt-out, of course, to try to better prescribe a, a retirement solution for those participants. Older participants have more complicated financial situations. They have more to deal with. And so it makes sense that maybe the one size fits all doesn't work for everyone, especially when they're getting close to retirement.
Well, Greg, let's talk now about the survey, which of course people can view on the Invesco website. The link should be down below, right near my sternum. Social Security, defined contribution, personal savings, defined benefit plans. If, by the way, you're lucky enough to have one, some of us are not lucky enough, some of us are. But are there generational differences to how people perceive where retirement income is going to come from?
Yeah, so there are some generational differences, but I think what was most striking is overall, 83% of participants said that their DC plan was going to be their number one source of income in retirement. And that was far above Social Security at 63%, or defined benefit plans lower than that. Even more interestingly is if you look at just the participants that are covered by a defined benefit plan, still 79% of those folks said that the DC plan was still going to be their number one source of retirement savings. And I would say that the biggest difference generationally was as you get younger, the more expected dependence there is on the DC plan, and the less so on defined benefit, which you would expect. But the attitudes around, maybe surprisingly, the attitudes around Social Security were pretty constant. So not a whole lot of difference among generations and how important that was in the overall scheme of things.
Yeah, lesson to the policymakers who are, considering some enhancements or changes to Social Security. Greg, let's talk about withdrawing of funds. And there has been a shift. And to use your words, that it was almost heresy to consider retaining funds in the plan. But where is the industry? Where are participants today? Where are employers today with keeping that money in the plan and preventing what we call affectionately leakage?
Yeah, so this is where we've seen a huge shift. In fact, those of us in this industry know how glacial, some of these movements are. But we've seen a big shift in the last 5 to 7 years on plan sponsors and their desire to retain participant assets. So as part of our study, we surveyed 100 large plan sponsors, and 77% said that they were either actively encouraging or simply wanting participants to retain assets in the plan. A much smaller percentage were neutral, and only 1% said that they wanted participants to leave the plan. And interestingly, 50% of plan sponsors said they were actively encouraging participants to stay in the plan after retirement. So, and that's a pretty remarkable shift from what we've seen in other studies over the years on this.
Yeah, I mean, it really is a mindset shift, and there's a lot of benefits to keeping money in the plan, not least of which is economics, but also with retirement income planning. And how has that shifted? Has it shifted things to a more holistic view of retirement income planning? Because, you and I both remember, and you're right, the industry is very glacial. In fact, I had hair when we were first considering all this. But as things have evolved, have employers evolved, I should say, around retirement income planning and how to offer that comprehensively to employees?
Yeah, I think a more holistic view is more common now. And I think that's due to a couple of things. In our study, plan sponsors said their number one reason for wanting to offer retirement income was to take care of employees. And I believe that. I think that and it's not all, based on altruism either. There's studies and data out there showing that when participants feel better and more confident about their finances, they're likely to be less distracted and better employees. And, financial, and on the flip side, financial trouble has been noted as one of the biggest distractions for people, doing their jobs. So I think that employers are aware of this, and they're looking at financial wellness, just like they're looking at, physical wellness and healthcare, and thinking about what they can do for employees. And given employers, bargaining power and their size, typically in all of these areas, they can get better benefits than people can find in better investments and better programs than people can find on their own.
Yeah, absolutely. Well, Greg, I need to take a very quick break. When we come back, we'll talk more about the perceptions around retirement income, including evaluating retirement income products. You're going to want to stay tuned right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms, especially for the smaller businesses? I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
Are you stuck with a low credit score? A credit report and score that's causing you to be denied credit or pay higher interest rates than others for the same things? Then do what Terrence did and call Credit Repaired for your free credit evaluation to help restore your credit.
I started thinking about buying a new house, and my score wasn't where I needed it to be. I called and spoke with one of the representatives, and we just had a good conversation, and I liked what he was saying.
Just one call for his free credit evaluation was all it took to start back on the track to repairing his credit.
I'm seeing the deletions and I'm getting the report, so I know something's being done. It does make a difference to me.
All it takes is one call to get started.
Credit Repair has given me a second chance to have a better credit score.
Don't let a low credit score hold you back another day. Do what Terrence did and make the call for your free credit evaluation.
Call 800-819-4152. That's 800-819-4152. Again, 800-819-4152.
Welcome back. This morning's show is powered by Invesco. To learn more about Invesco and the research we're discussing this morning, visit Invesco.com/DC. And we're joined this morning by Greg Jenkins of Invesco. Greg, thanks for sticking around with us this morning.
Yep.
So Greg, we talked earlier about there's not a one-size-fits-all approach for participants, but it seems as though there's not a one-size-fits-all approach for employers, plan sponsors, sponsoring these retirement plans either when it comes to retirement income.
That's right. I think so. There's been a lot of evolution already, and there are many new products that have come on to the market. But I think it's clear to everyone in the industry now that there's not going to be a magic bullet solution here. There's not going to be one type of product. Think of like a target date-esque sort of solution. There's not going to be one one solution that solves all of participants' needs. And so you do find some variety out there. And I think that the other thing that's become clear to a lot of employers is ultimately they feel like there's going to need to be more than one option for retirement income. You also find quite a few differences in philosophy among plan sponsors. So let me explain what I mean there. So some plan sponsors are looking for more of an annuity or insurance-based solution, and others are looking for more of an investment-based solution. Some employers picture defaulting participants into retirement income, and others are just fine with a lower adoption rate and a strictly optional program that that people can take advantage of if they want to. So you do find a lot of differences. But again, I think ultimately there will need to be multiple options for participants if we really want to give them the tools they need in retirement.
Well, Greg, since there's not a one-size-fits-all approach and you need multiple products, if you're a retirement plan advisor, a fiduciary, an employer out there, how do you evaluate these different products to find out if they're suitable for your plan and your beneficiaries, your participants?
Yeah, great question. I think that this is an area where plan sponsors really need to lean on their advisor or consultant for help. Not only are there so many different new options on the market to make sense out of, but also if you do take that next step and you decide to actually make an implementation, the selection and monitoring of a retirement income provider can be a pretty daunting thing to do. So I think this is where plan sponsors will definitely want to lean on their service providers for help. It's also a topic where it's good to engage your ERISA counsel because there is a fiduciary side of this, of course, and it's perhaps a little more complicated than some other parts of the plan. And so it's a good time to also talk to counsel and get advice about the governance and about the fiduciary aspects of a retirement income program as well.
As part of a follow-up on that, Greg, flexibility seems to be a really important area of evaluation. And by flexibility, I mean the ability of the participant, whether they're locked in, like a traditional annuity locked in for a period of time, or whether or not they can come in and out of the product. From your survey, where does flexibility fit in that evaluation?
Yeah, great question. So I think this is where on this retirement income study in general, we found that the focus groups were really critical because it's hard to explain some of these concepts within a survey. And we really needed to get a sense of how people thought about some of these different issues. And part of that is the design features of a retirement income program. What are most important and what are people thinking? And what we found was that flexibility, as you said, it's the key to everything. It was the number one word that we heard over and over again in the focus groups. By the way, when I say we don't conduct the focus groups ourselves. We had the help of Greenwald and Associates. They're the professionals that run the focus groups. We're watching behind the glass and providing feedback. But one of the things that we heard over and over again was that participants want to have access to their savings. And the number one reason cited is unexpected healthcare costs for themselves or a family member. It's one of the things that all Americans face, and having access to your money when you're in retirement is really important to people. Now, this got a little better when we talked about the fact that you might just set aside a portion of your savings, maybe a quarter of your savings in a guaranteed income option, and so maybe just a portion would be locked up or would be harder to get access to, and that definitely changed things. But still, it's clear that this is an issue that we're going to have to. I think we're going to have to educate around it, and that participants need to understand that if there are guarantees involved, then there are probably going to be some encumbrances to you taking that money out at a moment's notice.
Yeah, and to that point, it's probably, reading the research, it's important to jumpstart the conversation, start early when it comes to retirement income. Time can be your ally. You don't want to run out of time as you're approaching retirement. But we've made a lot of progress in terms of messaging. You talked about it. I mean, there's a lot of layering, to use your words and your plan sponsor clients' words. We've got the quarterly statements, which have messages on them. They've had them for years. We've got websites now and quarterly statements with lifetime income illustrations that are now required. But is this enough to connect the dots between savings and retirement income? Because according to the research, they should be intertwined. You shouldn't just think about, hey, I got $1 million. It's really, what is $1 million in terms of how I'm going to meet my expense needs in retirement?
Yeah, I totally agree. There's a lot of work to do here in this industry and with in between employers and participants. And the conventional wisdom used to be that you would talk to participants in their 50s about retirement income and their options. And what we found was that people in their 50s, many of them have already made plans, or they've already hired an advisor, or they already kind of have their ideas set. So it may not be the best group to start introducing new ideas to. Now, interesting, what we found was that younger participants had quite an appetite to talk about retirement income options. Now, when I say younger, let's be clear here. I'm talking about younger Generation X and millennial workers. And but it's hard to believe, but the oldest millennials are now 40, 41 years old, which is amazing. But yeah, there was quite an interest among younger participants in retirement income options, and a lot of it is, I think, because they're thinking about where does this road go. And also, many younger participants have a non-traditional way of thinking about retirement. They think about maybe I leave my job and I go start a second career. And so, having more information about where this road goes, I think is more important than ever. And back to your question about the income illustrations, I think that's a good starting point. The income illustrations, of course, are going to be mandatory based on the new regulation. And I think that's a good starting point. But hopefully, plan sponsors will do a lot of other communication around that. And I think record keepers are providing quite a bit of help there. But some plan sponsors I talk to, they say, well, we don't have a retirement income program yet. And I would argue that most do. Actually, the fact that you can set up automatic withdrawals or regular withdrawals through your record keeper as a retiree, that is a retirement income program. So there's something to communicate about right now. As I mentioned, many people don't remember receiving anything on this topic. And in fact, we found that 66% of participants, only 66% thought they were allowed to keep their money in the plan. So the remainder either weren't sure or thought they definitely needed to move the money out of the plan. So there's, I think clearly there's a lot of work to do there, and getting that retirement income conversation going early is going to be really important if we expect these programs to be a success down the road.
Yeah, it's a lot more than handing out that enrollment pack and just saying, hey, good luck, hitting them on tapping them on the back and saying, talk to you in about 50 years. Greg, we're going to have to leave it there. Really interesting survey. Great to have you back, and continue the great effort. And we look forward to having you back on the program again very soon.
Thanks, Jeff. It was great to be on.
And that wraps up this episode of BRN AM. Have a topic of interest, someone you think we should talk to, drop us a line. And don't forget, for all the latest curated news and lifestyle, wellness, finance, tech, so much more, and all in one place, check out today's edition of our daily newsletter, The Morning Pulse. Want to search our archives, check out our latest content? Well, visit our website and, of course, our streaming partners. We're back again tomorrow for another edition of BRN AM. Until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.
Waiting here for you to take and drink of. But if you
Now is your opportunity to co-create content around any topic on the First Lifestyle and Wellness Network. Reach a global audience through our platform and co-own exclusive branded content. All of our programs are available on demand and also as audio-only podcasts, so you can take us on the go. Broadcast Retirement Network, available anytime, anywhere, and on any device.